Welcome to Business Line's State of the Economy podcast, where you'll find insight, analysis, and the story behind the numbers.
Hi, welcome to Business Line's State of Economy podcast. This is Subramani Mancombu back again with an interesting episode, this time on commodities. The commodities market has been sashaying since the COVID pandemic. The Ukraine war only complicated things, while inflation and consequent hike in back interest rates have played a role in demand and supply. Gold zoomed to record highs a couple of months ago, while silver has been holding to its gain. Copper and other metals have not been able to hold on to the peaks. Crude oil has been range-bound despite OPEC Plus efforts to raise prices. In these circumstances, how will commodities market be in 2024? And what will be the impact in India? To tell us more, we have with us Mr. Kishore Narne, Director, Head Commodities and Currencies, Motilal Oswal Financial Services. Welcome to Business Line's State of Economy podcast, sir. It's a pleasure to have you today on this podcast. So the 2024 is just up there and we see there is a lot of action on the commodities market. So how will the commodities market in general be in 2024? And what could be the reasons for the behavior?
Yeah, my pleasure, Subramani. Thank you for inviting me here. So commodity markets in India has been going through a phenomenal change over the last couple of years, especially 23 has been a year where the momentum has actually picked up on the trading side, especially after the launch of options in led by crude oil options and natural gas. And also now we are seeing, witnessing some pickup in gold and silver as well. So overall, it's been a great year for domestic markets. There are a lot of new things which starting with the pickup of options momentum, number one. Number two, allowing FPI clients to participate in domestic commodities. Number three, MCX migrating to their own platform and is now gearing up for launch of various new products in the coming year or so. I think this has been an exciting time, and we're looking forward for 24. I'm sure it will bring a lot of new participants as well as new volumes.
So what about the global commodities markets? Because there's a lot of turmoil there, especially the Red Sea crisis, then the Israel standoff.
Yeah. So see, globally, I can put the entire segment into three buckets. Definitely to start with, as you said, that turmoil in Red Sea. So let's start with the energy commodities, especially the crude oil. So we started this year, entering this year with the Russia-Ukraine conflict, and then the Israel and Hamas towards the end of the year, last quarter, the conflict of Israel and Hamas. I think these two, despite these two major conflicts, and also concerns about global supply chain disruptions in the Middle East, despite that, actually, we have not seen any major strength in crude oil prices as well as natural gas prices. Again, both are two different commodities with two different geographies to track. So both the energy commodities are struggling with the demand side aspects. The demand is not picked up. The demand has been very slow. Especially China is not buying as much as what the world predicted. And so despite the production cuts by OPEC plus, so all the three events, Ukraine, production cuts, and Israel-Hamas, despite all these things, we are actually trading lower. So that actually shows that the demand of this commodity is not in line with the production. So production is still overhang is there. And there are further production cuts announced by Saudi now. Despite that, actually, I don't see any major uptick in demand at this point of time. That's as far as the crude is concerned. On the natural gas front, humongous inventories. That's a record high inventories ever we have seen in US. Europe also is now flooded with gas, actually, despite the conflict. So I think that's actually pushing down the natural gas price. Natural gas price is actually down by 30-35% year on year. Despite all the conflicts, energy prices are softer. Crude is 10-15% down and natural gas is 30-35% down. Gold and silver, yes, there is an anticipation of rate cuts coming up. There was an anticipation of recession building up. So, but these anticipations were also not turned into reality. Every economist in the world have been predicting recession for the last couple of years. which has not actually turned out. And finally, the rate cuts cycle, everyone is predicting that 2024 will see at least three rate cuts from the Fed. I personally don't really see that many, maybe two rate cuts, that too towards the end of 2024. So primarily, the rally in gold was triggered by anticipated rate cuts and recessionary fears, which is not in place. So towards the end of the 2023, the entire momentum tapered off, and then we closed not marginally in positive. We closed in precious metals side, and on the base metals, the non-ferrous industrial metals, I think nickel, zinc, and copper have done very well. There is an uptick in demand from Chinese after the COVID reopening. There is an uptick in demand, but still there is a lot of momentum which is yet to be played out. So they're marginally positive, but not that great. So overall, it's been a positive year for commodities as a basket, but it's not as strong as any other asset classes like equities. It does not perform that well, actually.
There has been a slowdown in the global economy. How will that play out this year?
So slowdown, again, it's a very subjective because the entire globe is not slowing down. The slowdown is happening in China, actually. The 2023, the slowdown happened in China and some of the Asian countries. US is still going very strong on the growth front. There is a big problem in Europe, actually. The Europe has slowed down significantly and China has slowed down. But China is still a mammoth consumer for the commodities, and it still is going strong. But the real estate segment in China has actually slowed down significantly. That is actually pushing commodities under pressure. So US, yes, it is still positive, going great. No pain at all in the economy at this point of time. Retail sales is not down. Jobless claims are not increasing. Unemployment rate is not increasing. So they're doing great. Europe, the consumption is down. Even retail consumer spending is down. The currencies are actually struggling, and energy crisis is something which has hit them. So I think these places where the industrial commodities, especially non-ferrous metals, demand has been significantly lower. China is slowed down massively. They have lost a significant momentum in real estate segment and infrastructure push. So the commodity consumption, especially on the iron and steel, cement, some of the non-ferrous metals consumption has gone down. But towards the end of the 23, that's the last quarter, October to December quarter, as there is a push for stimulus in China, the demand started to recover and show signs of recovery. I think that is actually now flowing into 24 first quarter. I think there's a strong promise from China that there could be a big revival. We expect Europe to stay softer and US to stay buoyant on the economic front.
What are the upside and the downside risks to these outlooks?
So the downside risk for all the commodities per se is the dollar. If the Fed cuts rates much quicker, then dollar will fall significantly, and it is positive for all the asset classes, including commodities, including the financial assets, including equities. But as I was mentioning earlier, the anticipation of rate cut is not based on the pain right now the US economy is going through, but just it's a basis that already rates are too high, so the rates have to soften. And I fear the economics doesn't work like that. Before the Fed actually comes out and cuts their rates, there should be some evidence of pain in the data of the economy. Either there should be too many job losses, there should be too much slowdown in the consumption, or there should be retail sales, or there could be housing bubble, or housing prices crash. Nothing is happening. So I don't see why Fed should come and cut rates in March. If the Fed doesn't cut the rates and say, then in March they come and say that, okay, the evidence is not still in favor of cutting rates, so let's hold on this for a couple of quarters, then there could be a massive downside in most of the asset classes and a strong rally in dollar, which actually could be negative for commodities. That's the downside risk. On the upside, China is going to be a big, maybe there could be a hockey stick kind of a recovery, which could be possible on the consumption front, actually. I think post-COVID lockdown opening, and then they had some kind of a slowdown, but the stimulus could work very well, and there could be a significant uptick in Chinese economy, which will drive commodity demand, and that could actually we've seen in some of the metals like nickel, copper, and zinc. I think these are the metals which automobile industry and construction industry will be solely relying on. So these metals could have a significant upside based on the China. On the geopolitics, it's very difficult to predict what's going on, but the concerns and the risk premiums right now are already built into the crude. The Red Sea disturbances are already built into the premiums, in insurance premiums. Already there are a lot of news flow that how a day by day the US and Iran getting closer to possibility of a conflict there, right? So those things are already there, but it's highly unpredictable events. And so that is the unknown risk, what we can see. The known risk is dollar, the unknown risk is the geopolitics.
Sir, how is it going to be for the Indian consumer, particularly with regard to gold and silver? And also, like these days, copper and aluminium are also, they are being consumed by the common man in terms of looking at constructions and other things. So, how do you think the 2024 will be for India, especially in terms of gold, silver, copper, aluminium, and also if you can on steel?
Yeah, I think, see, as far as outlook is concerned, what we're predicting is the first quarter 2024 could be, and to up to the second quarter, let's say the first half of 2024 could be possibly slightly weaker or softer, whatever you can put it, because of two, three things. One is on the energy commodities, inventories are significantly higher, natural gas inventories are higher, even crude inventories are higher. So we are getting into that inventory drag of the prices. And on the metals front, again, there are catalysts are missing where you can actually drive up this demand for some of these metals. But I think there are story, especially which could be production related story in zinc. There could be production cuts coming up, and also triggered by a strong demand. LME stocks are slightly marginally higher, maybe a couple of years high, but still there could be a further stronger demand coming up. And copper has a lot of dollar related pressure on that, and at the same time there is a possibility that liquidity and the stimulus in China could actually trigger a rally. So because of these risk factors, what we are predicting is for the first two quarters, that's up to the Q2 of 2024 calendar year, there could be some of the softness in most of these metals. And the rally in most of the commodities would start the end of Q2 or the beginning of Q3 of 2024. That's where we see probably the action coming up on the Fed on the rate cuts. So as the rate cuts come into play, the markets will start to rally, especially the commodities market. So on bullion, for silver, we are extremely bullish on silver for the next 2-3 quarters. Anything close to 66,000, 70,000 is where we are seeing a value buying for silver. Upside could be as close as 88,000 to around 90,000 rupees in India per kilogram. On gold, anything close to 61,000 is a value buy for gold for long-term investors. And upside could extend to around 69, 70,000 rupees per gram, per 10 grams. On the energy front, actually, anything close to around 56, 5,700 or close to that is probably a good sign to buy in crude. And that could actually take you to around 7,000 to 8,000 rupees on the higher side, which would take us to probably again above $100. But towards the end of 2024. That's not the early. So we are not extremely bullish in the beginning of 2024, but towards the late end of 2024, most of the commodities should start performing because the dollar index is expected to go down as the rate cuts will fall into play. On the metal side, probably copper is one thing which we are seeing in dollar terms. It could go up to $10,000 per ton. Similarly, zinc can go to around $3,200 on the upside, and aluminum anything close to 2,200, 2,300 is a good buy on the dollar front, and 3,000 could be the target for the end of the year. So these are the price outlooks for respective commodities.
So there are good chances of gold touching 70,000 per ton gram and silver touching 80,000, at least 80,000 per kilo.
Yes, yes.
Fine, sir. It has been a real pleasure talking to you and picking your brains. Very valuable insights that we have got. I hope our listeners also will be wise listening to this. Thank you very much.
Pleasure joining you. Thank you.